Well, the RBI has left all rates unchanged. So what does this mean for debt funds? Let's ask Dhirendra Kumar of Value Research. Dhirendra, which funds would benefit from RBI's policy and what's your outlook for debt funds now?
No, I don't think there is any change in, there is any change in, which funds will benefit or it's going to alter anything because there is a status quo. But yes, the view remains that, at some point, the RBI has become, supportive of growth, and it has talked about, at some future point, cutting on rates or indicated that. So in that sense, the rate outlook remains the same. One should, an FMP investor might well consider, moving a part of his money to long-term bond funds or gilt funds if he's an opportunistic investor and seeking higher growth, because it will materialize over a period of time, not necessarily today.
So, Dhirendra, which debt funds would you in general recommend to investors at this point?
As I said, that high return which we have started believing in from the short-term bond fund or ultra short-term bond fund, that will prevail. So if you have short-term money, be there. Don't take chances. And maybe you have, you will get, if you get into, long-term bond fund, dynamic bond fund, there is a likelihood that you will get more return from the FMP today, which was the flavor yesterday. So, I would say that FMP investors should well consider a dynamic bond fund or the long-term bond fund. For other set of investors, it doesn't matter.
Then let's take some queries as well, and the first one is coming in from S. Chandrasekhar, and he wants to know how is the NAV for an FMP calculated and why do they need to be quoted on a daily basis?
The law is to calculate the NAV of every fund, so that is why it is calculated. NAV of a FMP doesn't matter because when you put your money in a FMP, even though technically it is listed, which means it should be, you have liquidity, but they are not traded. So I would say that it is just for reference, and even a decline in value of a FMP doesn't matter, because if interest rates go up and the NAV of a FMP declines or falls substantially, it doesn't matter because the securities are bought to be held till maturity. So even if there is a market valuation which reflects a decline, it doesn't matter. And investors should wait. Investors in India buy FMPs to redeem at redemption, at which point they are unlikely to be facing the capital erosion which is visible in the interim. So just look at NAV of an FMP for academic reference, nothing else.
Dhirendra, second query is from Unmesh Bagwe. He asks, does it make sense to invest in ELSS considering that DTC will take away the tax benefit?
It doesn't matter. Invest in ELSS till DTC doesn't come into play, because that is the only point till you can invest. The other is that even in you invest in this year till March 31st and you will be entitled for all the benefits that you get, and the equity gains are tax free even in the DTC regime, so it doesn't hurt you.